Eeny, meeny, miny, mo. Catch a tiger by his toe. If he hollers, let him go. Eeny, meeny, miny, mo. Alright, give me 100 shares of this one. Hold up. Let me stop me right there. Instead of just guessing which stocks to trade, I don't know. How about just reading the label and maybe seeing if it's what you're looking for? Don't know what I mean? Well, I'm glad I caught you when I did. Join me on the inside so I can show you how. Our mission is to help you build wealth one video at a time. Welcome to the vault. What's going on, family? It's your favorite headless YouTuber back again with a brand new video. And as always, before we get into it, let's get started with some Monday motivation. You don't always have to understand your journey in life. You just need to trust that you're going in the right direction. In today's video, we'll talk about how we pick the stocks we trade. And of course, we'll top it all off with our weekly watch list. If you're new to the channel and like what you see so far, show us some love by liking the video, subscribing, and making sure notifications are turned on so you don't miss any new content. Without further ado, let's get to it. Get out your notebooks. You're going to want to write this down. The 3 things we look for when trading options are: number 1, liquidity, which we know is simply a measure of how easy it is to buy into and sell out of positions. Liquidity is important because we never want to be stuck in a position when we're trying to sell. Number 2 is volatility, which measures how fast a stock's price moves in both directions. Volatility is important because we want to be able to capture strong moves frequently and not have to sit through constant sideways movement. Number 3 is profitability, or our ability to realize acceptable amounts of profit, whether you look for percentages or dollar amounts. Profitability is important because, well, making money, of course. Once we find a stock that checks all 3 boxes, we VIP certified as a tradable asset. Now, to ensure that we always have liquidity, volatility, and profitability in every stock that we trade, we're going to look at volume, or the number of shares bought and sold on any given day, and the bid and ask spreads, or the difference between the bid and the ask on our options prices. Now, in the interest of keeping this video short, I will not re-explain the bid and the ask. So please go check out our stocks and options breakdown part 2 video and skip to the 5-minute mark, where we break down the bid and the ask in this simplest and most digestible way possible. Once you're done, come back so you can fully understand what we're about to talk about. So, with volume, we look for stocks with at least an average volume of over 2 million shares per day. This ensures our liquidity. This way, we will always have someone to sell our contracts to whenever we're ready. And if you've already gone to watch the video, you'll know that we look for relatively tight bid-ask spreads to ensure that we're not taking any hits to our profitability while holding the trades. I wasn't going to mention this third metric we tend to pay attention to for volatility, but I changed my mind. It's called the shares float, or the number of shares available to be traded on a stock. The larger the float, the less volatile, and the slower the stock should move. The smaller the float, the more volatile and the faster the stock will move. It makes sense if you think about it. If a company only has 100 shares available, it'll be extremely easy to manipulate the stock's price, whereas if it had 2 billion shares, it would take a lot more transactions and it'll be a lot harder for you to move that stock's price. The only caveat to determining whether a float is small or large is that it depends on the stock itself, because generally a larger company is expected to offer more shares to trade. Let's take a look at Square, Tesla, and AMD for example. 3 stocks that we've traded every week on this channel. Square has a shares float of 524.68 million shares. Tesla has a shares float of 2.64 billion shares, and AMD has a shares float of 1.599 billion shares. Based on the understanding that a smaller float would equate to a faster moving stock, one would assume that Square is the fastest moving stock of the three because it has the lowest float. However, that isn't the case. In fact, the fastest mover happens to be AMD. But why? Okay, to make this make sense, there's going to be some math. The easiest way we found to determine if a stock's float is too large or small is by dividing the average volume by the shares float to get what we call the float volatility ratio, or FVR. This isn't something you can Google right now or even find on Investopedia. Maybe one day soon. But this is something inside the vault that we found to be a great indicator to determine short-term volatility. You want the FVR to be between 2 and 8%. Anything less than 2% and you have a slow mover on your hands, which isn't ideal for short-term trading. Anything over 8% may be a little too volatile and pretty hard to predict. Looking at our three stocks here and dividing the average volume by the shares float, we see that AMD is the most volatile with a 5.6 FVR, Square is second with a 4.2% FVR, and Tesla is the least volatile of the three with a 3.6 FVR. Keep in mind, all of these numbers are great for short-term trading, which is why they're on the watch list. Most of the stocks that you see us trade on the watch list are going to be between this 2 and 8% threshold. Now, keep in mind, this video isn't going anywhere. Watch this as many times as you need to gain an understanding of this concept, and don't hesitate to ask clarifying questions in the comments. Your success is our success. So we truly want you to be able to apply these concepts and strategies to build wealth for yourself and your family. Now, before we get out of here, let's dive straight into our weekly watch list. Alright, looking at Tesla, we can see that it continues to respect our levels. Leaving last week, we were expecting Tesla to turn bearish and fall down to our 181.21 level, which it did. And along the way, as we always say, we just play level to level to level. So we see first it broke our 206.73 level here, fell down to 199.33, where it broke below and held to fall down to our 189.79. Consolidated for all of Tuesday to break below on Wednesday, fall down to 21, and actually exceeded expectations, giving us a low of 174 for the week. Following the CPI data, we got a run market wide. Surprise, surprise, right at support for our stocks. We got our break above our 189.79 on Friday. Then we closed right where we are now at 195.76. So looking forward to this week, we'll be watching the same levels. If we get a break above 199.33, which I'm expecting us to, I do see Tesla turning more bullish because we did hit a significant support near our 181.21 this week and got a nice solid bounce with this $15 green candle, this 8% green candle during the pre-market on Thursday. I am expecting bullish, but I will continue to play level to level to level. So at this very moment, we're watching this 199.33 level. If we can break above, we can go at 206.73, and I see us possibly running as high as 216.17 this week, but we'll just see what the market gives us. Moving on to Square, same exact thing, level to level to level. As you can see, we went from 63.13 to 65.23. From 65.23, had a strong move down where we broke through 63.13 almost immediately. And yet again, coincidentally, the CPI data gave us a nice bounce from our support, where we blew through these levels during the pre-market before the market even opened to get us an open above 65.23. See that we closed above 71.21. On Monday, we'll be looking to see if we can open and hold above our 71.21. I can see us running to 74.73 and even possibly 76.68. But again, we just continue to play level to level to level. And that'll do it for today's video. Just remember, don't be afraid to fail, because it is in the darkness where we learn to appreciate the light. No battle is won without a fight. Failure should only change the strategy, never the goal. If you've enjoyed this video and want us to make more videos more often, you know what to do. Be sure to hit that thumbs up button below and subscribe to the channel if you haven't already. Also, comment below your thoughts and questions to let us know how we can continue to improve the channel. This channel and all of its content are made for you. Thank you for watching this video, and I'll see you in the next one.